All right, this is Red Ben. It is Wednesday. I forgot what day it was. Wednesday, April 27th, 2022. And we are going to talk about when to fight a trend and when to join a trend or just leave it alone, and how to tell the difference before it's too late. So, now this is actually the 3 minute chart here, but I've got more information on a 3 minute chart so I can find more examples of some of these patterns. I want you to imagine that we're looking instead at a 30 minute chart, and that the New York Open was, or it could be the London Open too, was this large green candle, and you can see it had very large volume as well down here. So let's imagine we opened here, and then B period was here, and C period was here. Most traders who have had really any experience, like especially day trading, would immediately identify this as like a trend day uh, behavior. It's open drive higher, right? Again, I know this is not the open, but let's imagine it is. It would be open drive higher with trend day up likely. So that is quite a bit different than something like this one is an actual open, and it starts with open drive higher, right? And so here it looks like trend day up on a 3 minute, and you can see that that was not the case. So why is it that some of these you'd never want to fight, right? Whereas others tend to reverse, and when they reverse, are really good trades to the other direction. What we're going to look at here, first at least, is on the regular candlestick chart. As I back up here and just try to find some more useful data, we're going to look for situations where we could have used some like slightly advanced analysis techniques, but a lot of stuff just kind of putting together things most people already know, to try to estimate whether or not what we're seeing, as far as the impulse move, up or down, is likely to be retraced relatively quickly, or whether it is likely to continue or at least hold for the time being. So this will hopefully help people not make poor decisions during impulse moves. For instance, like shorting here rather than shorting here or here, is a real common mistake. People will, short here, stop out, short here, stop out, give up, and then long, and then lose, right? Whereas what we should have been doing is buying, adding, or at least holding, and then here taking profits and not necessarily trading a trend following strategy. And then this is really our first chance to get short, with most trend following strategies. So a lot of this has to do with identifying what the market's trying to do at the moment. And to do that, we're going to look at primarily two things, and that is the range of the candles or the moves. It's not necessarily candles, because candles are just based on time, but it's the range of the rotation, really, as well as the volume, which is, of course, down here. Um, I also use volume by price, the volume profile. This is just a visual range volume profile, so it's just showing you in this box here, this is where all the volume was put in. So as I move this around, those volume bars are going to shift. So it's not a this is not an example of session volume. And if I sometimes you that's a lot more helpful. But for instance, if you're looking at the open, you don't have much of a session to work with. So oftentimes it's helpful to know what the volume is in the surrounding prices, because this is volume by price. So for instance, if we backed out, this is just like 2 or 3 days ago. I just kind of backed out until I saw some movement. So I'm not honestly not totally sure what's coming next here. But I obviously did. I mean, I'm paying attention to the markets regularly because I'm day trading them. So it's not completely random, but we're still going to kind of try to take a look at whether or not we can tell if it's going to continue in one direction or mean revert. So let's see. Before I talk about market phases real quick, let me show you what my chart is made out of. In addition to volume and the volume by price, I've also got this new daily voodoo uh, indicator that's a brand. I've shared it on Discord. What I'm using this for is not only to find the voodoo ranges, which is here, but also to give me the range filter and these pivots, which are these little dashed lines. So what my setups are that my settings here are I'm enabling the custom average value on this, which is basically saying I want my voodoo range lines to stay still all week long. And so I just give it any of the voodoo range levels that I share on the weekend and put it in the custom average value bank here. And then where it says gap, this is where the actual voodoo range itself goes. So the range this week for NQ is 116.5. So that's what goes here. And like I said, one of the levels that we want to that we want it to anchor to, which can be any of the levels, is 13,146.25. So this is the part that gives me the voodoo range, and then this tells me how many of the lines I want to print. You can see when I print more lines, I can see further out from wherever this point is. So it just depends on how far away you're anchoring it. If you're anchoring it to a price that's real nearby, it's not going to make a difference. If you're anchoring it to a price that was at the bottom of the range and now you've traded 3 days higher, maybe you want more than 10 levels. So that's just up to you how busy your chart is. Then this is the HMA. Let's see. No, I'm sorry. Here, the HMA pivots, which are those little dashed lines. My standard is 25 for the short, 64 for the long. They need to be square rootable. So these are my favorites. I usually use the close. I'm not showing them, but if you want to, you can show where those two moving averages are. It's not really necessary, but it's kind of interesting. What it's going to do is it's going to print a pivot line whenever the larger whole moving average breaks through a voodoo range level, and then it's going to print the pivot where the shorter HMA is, and you'll see that they might not be quite as significant as the voodoo range levels themselves, but they often get reactions. So it's nice to know where those are occurring. You can extend the pivot lines. It gets pretty busy, but on some of my you can find some really nice pullback entries like here, for instance, and you can tell that like this is going to be an area that is going to be defended. So like this, so it can kind of help make sense of some of the like in between levels to have it. I'm not going to put it on there right now because that's not really what we're going to talk about. The one that I really want to pay attention to is this new range filter. So you hit enable range filter, and when it's not checked, the red and green go away. See that? The little lines and the little cloud. When you add it, it's going to add the green and red line and then the cloud. I've got a whole video about how this works, but since it was from years ago, and since I did that video, I've moved from trading options to trading futures. And I have found with futures a different setting. I use different settings basically because I need it to be a little bit more, like a little bit faster to react. So I'm using the wicks to determine where to put the. You can't really see it much, but there's like a red and green like cloud behind it, behind the price itself. I don't use that as much for these settings, but if you look real close, there's like a red and then a green, and so when you go beyond those, you're that's significant. But I'm not usually trading it that way. What I'm primarily looking at is the line in between, which I'm basing off of the average change over the last 14 periods, right? So I'm using the 1.618 range size here, and then I'm smoothing the range with a 27 period. So these are the settings that I'm using. I'm calling this a the pullback hunter settings. So if you click on this, it should give you these settings. You might have to adjust wicks to close or close to wicks. You can see when you have it on close, it's a tighter line and a tighter cloud, which for some people might prefer. But I like seeing all of the little micro changes that happen when you get the wicks involved, because I don't mind having a little bit of noise, but I don't want to miss any pullbacks when I'm looking for them. So I go ahead and use it that way. That's my settings. Okay, so the once you've got all that set up, what I can see here is I can look at just the line, the green line here, and then when it's red, it looks like this, the kind of pinkish red line back there. So I'm paying attention to when those switch between red and green. So like here's a spot that it switches, and then it switches back here, right? And those can give you some like periodical decision points, where you want to make sure that you know which side of the market has control. Because if the indicator is switching back to the color that is currently in control, there is likely a trade entry available. Just a matter of how precise you need to be when it comes to putting your stop and getting your risk reward. I'm not going to go into individual setups for like when to get long exactly and where to put your stop. That's just, I've done that in plenty of other videos. I usually use the TNP algo for that. But when it comes to analysis, sometimes candlesticks are really all you need. But having this little signal, basically, for instance, to tell me here that we made a pullback, see how it turned red for a moment, or pink, I'm going to call it red. And then we came back and continued. So it got you this little pullback. And that tells me that this candle here, if I'm bullish, will probably present a trade opportunity to the long side. So that's like straight and dirty how I'm using it. The tough part is that this long is quite a bit different than this long, right? That now because, and the reason is because here the fact that the bulls are in control is quite obvious, whereas here it is more neutral. And so I talk about market phases in my using the voodoo range video, and this is a phase that most people call balance, where it goes up and down. The auction goes back and forth, and generally you're making higher highs and lower lows on a micro time frame. So like here we made a low, and then we made a high, and then we made a lower low. But right before here, we were making higher highs. So you kind of have this mixture. It's not really a trend. It's just sideways action. I call that negotiation because the way I see it is that the two sides, the sellers and buyers, are negotiating over this range to try to figure out who has control. And once that's established, like here, this is an established control happens there, then that whole range becomes resistance. So, I mean, technically you could say that this was also a little bit of negotiation, like a second negotiation. So that ends up being a pivot later on. See that? So that's just how market structure works in general. But having a way to determine what the likelihood is that you are trending versus balancing or negotiating is really important. And so one way you can do that is with volume analysis, and another way you can do it is looking at range analysis. And so we are going to look at those two together. So the basic idea here, let me start in London, so we actually have some real volume to give an example here. So we'll say here. So an example of examining range and volume and how they're related. What we're going to look at is the volume bars down here relative to other volume bars of the same color that were recently printed. So like this one versus this one in particular, because it's right before it, but also versus like the average of the last, let's say like 5, right? So the volume, and then also the range. So how far did the candle move? Again, this is a 3 minute chart, but this works on any time frame. As long as it's time based, it works well, and it even works better on a Renko chart. It's just that the volume you have to use is like accumulated volume, because each Renko bar's volume will tell a little bit different story than this. But for a standard candlestick, the way it works is that the bigger the volume and the bigger the range, the more decisive the move. And when I say the bigger the volume, I don't mean like absolutely. I mean compared relative to the previous candles of that color. So the other thing we have to think about is location, because structure is built off of location. So for instance, here we would, if we take off this, let's say we weren't totally sure if it was balance or if this is some sort of a trend, right? If we were trying to figure that all out, one thing we might want to do is say, well, where did the last aggressive sellers get involved? And so what we would look for is we'd look down here and we'd look for any volume bar that was relatively large, and that would be this one, right? And then you look up here and you can see that that included this candle here, and it was also followed by another red candle, so you could technically add these together. It's just 6 minutes of activity, but really just one big down move, right? So if I was not sure if this was what phase of the market we were in, I would mark off this little pivot here, right? So from this high down to this low. The fact that this wick is on this green candle doesn't matter right now. I'm just looking at the range. If you look, it went down there and then went higher. So I'm just lining this up with the range of that pivot. Like I'm imagining I'm looking at a Renko bar chart, basically, and looking at the rotation itself. Not concerned so much about time. And then I'm relating, okay, is this a big volume relative to previous red volumes? And I'd say yes, it's the biggest, right? So big aggressive seller comes in here. Did they succeed in moving the market at a like with a strong relative range? So it might look like they moved quite a bit, but if you look to the left, all of these candles have been moving about that much, right? Like this green one might have even been a little bit larger, and they didn't even need that much volume. See that? These volume candles are lower than this. So they moved this market up quite far, from 13,560 to 13,573. So 13 points, let's say. And then bears needed all of this volume to move it from 13,575, let's say 76, to 13,564. So right back the same direction. They consumed more volume. And remember, volume just means how many contracts were exchanged in that area. So they needed to push through quite a few contracts to get that exact same effect as the bulls got here with less volume. But that volume was very strong compared to recent attempts by bears to push it lower. So that's our information. And keep in mind here, this is all you see, right? The volume bars don't look very impressive right now because we've got bigger volume that's comparatively printing over here. Sorry about the jets. I live by Air Force Base. It's gonna be noisy for a minute. So the let's see, we've got to be able to see this volume. There we go. So we've got big volume here compared to the red ones, but slightly smaller volume compared to the green ones, and the range is about the same, if not smaller. Hopefully we all kind of agree on that. So let this jet fly over my house again. The other thing we can look at is volume by price. So the green volume came up to let's say 13,566.50. So if I just put a line there, right? Let's make it visible, preferably. And I look to the left. At that point, it was the edge of the market, right? And since then, to the point where we have this pullback, we have put in some volume above, and we could say that perhaps this is some excess, right? Anyone who knows how to read a volume profile will be familiar with that. It's potential excess. So it, at first, just from if you don't know what's going on in the bigger picture, the first thought might be, well, I can short here because we put an excess above, and we've got a lot of volume coming down. But there's a problem to that, in my opinion, and that's that you are fighting against a trend that has been able to move significantly higher without much fighting. They have not had to work very hard to continue to push. So the truth of it all is everybody wants to find the top and the bottom, but the very first rotation is very rarely going to retrace the entire thing unless you're in a balance range. So, for instance, this is rather common because we're inside of this balance range, right? But once you begin to trend and you break out of that balance range, sorry, let me do it like this. So here's the balance range. They, what I call, probed out of it and fell back in. That's when you get these big retraces, very, very commonly. And then they even often come back again, right? But when you break out of that structure, and you get one side dominating with volume, see that? See the difference between this and this, right? Like this one looks pretty strong, but this is just negotiation. This one is actually building again compared to the recent ones. And again, I only know that because this green is slightly smaller than this one, yet the range is quite a bit bigger, right? So it's a bigger range and it's going higher, but the volume is actually decreasing compared to the previous one. And even though you have increasing volume here, this high becomes vulnerable if you trade back under it, because then you have a sideways range. So whereas here you've broken out of this structure, you've put in another higher volume candle here to the upside, and the bulls continue to have success even as volume decreases from there, and it's increasing compared to the previous candles. So there's still a lot. Oops, I was only here. There's still a lot of momentum here. So the other way to, if you don't see the structure and you're too zoomed in to realize that this is actually not the place to short, one thing you can look at is the range filter. So the green and red line that's switching back and forth, like I mentioned before, this would signal when it goes to green to red and right back to green again in a trend and at a location that matters, like the 50% point between two voodoo range levels. Like that makes sense to me to buy that as a breakout. But I'm not going to buy a breakout in almost any other situation, and I would prefer to take this retest or another if it came. So the fact that I know that should tell me right away that if I'm shorting here, I should not be expecting to break this, because if this is a good long for me and people are successful there, they're going to defend it the first time through if they can, if it comes from up here and the volume like decreases, right? So when you see this big spike and then they look like they're gaining some ground, they take back this this high here, this early high, after the actually this is still before London Open, but it doesn't matter what time it is. They took back that first high and they closed below it. Like, let's imagine this is like a 15-minute chart instead of a 3-minute chart. It's still the same thing. In reality, it's just been going up or sideways up to this point, right? We've not actually gotten a real pullback yet. And if this is trending, these pullbacks are going to get bought. And where are they going to get bought? Probably at previous structure, right? So let's find some structure. So there's some structure here, you could say. And I know this because I can see how the market slowed down here. The range filter flattened out. See that difference between this like exponential higher? This is flat. So that tells me, okay, this is clearly, they're trying to build some structure here. So if I want to be real specific, I can do something like this and say that that's structure that might need to be retested. And then this high might need to be retested. This might need to be retested, right? Like there are areas that the market might want to come back to get and test to make sure the buyers still control there. But we should be expecting buyers to show up when that occurs. So All I'm saying is that when you get this kind of move out of structure, and especially if it's followed by some consolidation that breaks higher, our first assumption should be that that initial pullback, uh, it's not that it can't be shorted if you know when to short it, like if you have the location right. The problem is when you short it and hold it, assuming you're going to come back down here and retrace the whole thing. If your mind, if your brain is getting short here for the times that it comes all the way back, like do the research. But in my experience, that does not happen barely as often as I imagine it does. And the reason, like I said, is because we see it all the time in balance. It's totally normal in balance. But in a trend, it's not normal at all. So, because one side is completely in control, and that's because these guys are all trapped, right? They've all shorted at high volume, and now we're trading above them, and they've had no opportunity to get out. So when they finally get a pullback, they are lightening their short. If they imagine these guys are trading huge contracts, right, or huge books, where they're short from maybe much lower or much higher, but they're making adjustments based on daily movements. If they get more short down here, they added to their short, and now the price comes up here. They're not comfortable. They are uncomfortable. I'm sure everyone's been there where you shorted this breakdown, it just goes. Remember, these are 3-minute candles, right? So in that case, that might be a little bit more familiar. But if you get this, you're not thinking, I'm going to add to my short here. You shouldn't be. If you got short here and you are hurting hard, you should not be adding to your short here. You should be taking some off. You should have had a stop, right? Probably like here. But if you maybe held on to 2 just in case it turned around or something like that, or I don't know, whatever your strategy is, and you're still in it somehow, the idea of adding to your short here seems crazy. So that's what you have to ask yourself is like, when is it a good time to short or fight the trend? And when should I actually be looking for opportunities to like catch it? So if you missed this breakout and this pullback and this breakout, and then you saw this consolidation, the range filter turned red here, but it never turned red in here. So with that structure, with that strategy alone, it would not have gotten me long. But like I said, now I've created this structure here, and we went higher, probed higher here, and pulled back into the structure. Look at the range filter; it's turned red again, or pink. I guess it is pink. We'll say pink. So it's turned red again. So now if it turns green, assuming I have no reason to think that the buyers are running out of steam, I can buy. And so it turns green here. You can't really see because it's behind it. I can pull it forward. I don't remember how. I believe there's a way to make it in front of the candles as well. But yeah, the one way or another, the level itself is green, and so that signals that the bulls remain in control. Now, a lot of people would look here and say like, oh, but volume is so low, right? Like, doesn't that mean it's weak? And here's the problem with that. It's true that if this kind of volume candle would show up here at the breakout, that would be a problem, right? If these two were flipped, if the breakout candle that looked like this had this volume and the consolidation retest candle had this volume, I would not be buying that breakout, right? I would expect this to roll over. So, but what's different here is we're not breaking out. See that? We've pulled back. And we're coming out of this old structure and basically creating what's likely to be a balance range, right? This is probably going to be negotiation here. So what I should be doing personally when I see this is think, okay, if we fail to break out here, I should sell. Not short, but I should be getting out because we're probably going to take these lows out and then I can buy again. Okay, so that's my first thought when I see that. But we have not yet, the volume's low because we haven't even attacked the highs yet. Volume is going to probably continue to be low as long as we're trading in this scary area where no one really wants to buy because they don't know how high it's going, but certainly no one's shorting. So it gets just very low volume and choppy, right? So let's see if I could just go one at a time. Okay, so once again, if you look at the bottom, volume's still pretty low. Makes perfect sense. We're inside of the range of this pullback, right? These two red candles and their wicks become pullbacks. So let me just take this out so you can see it. You get the idea with the range negotiation. So this candle and this candle, that range is basically going to that's being negotiated right now when they bounce back up. And since really bulls just remain in control but aren't like there's no shift in momentum, there's no reason for a spike like this because we haven't really challenged the well positioned shorts up here. So whoops. So now we have, right? So now we've challenged. If you put a line here, just like we did here, challenged these guys, right? And got a volume spike there, which is healthy for bulls. We've now put, oh, okay, we haven't quite. We need one more. I'm wrong. I thought we did. So we did not. So that's still, a test is not a break, right? This is still negotiation. Perfect. Okay, beautiful. That makes a lot of sense, right? Like this makes a lot, it should make a lot of sense. We tested it, we pulled back, they tested again, and they don't break out. What do? Well, some people get nervous, right? They sell off. And so this is not a sign of weakness yet, but seeing this increased volume should get our attention. The great thing about this candle is it's got a big wick on the bottom, right? The lower wick included people who shorted at the low of this candle. We did not get the range filter to switch red, right? It never went green to red here. So there's not really been a momentum shift, yet people clearly sold through this wick and then it got bought up again. So on high volume, right? So basically what I'm seeing here is some kind of accumulation. Like it came down here and people were waiting to buy it. And so, yeah, it's likely getting absorbed. So let's see. Yep. Okay. So that makes sense. It breaks over the top and probes, right? Now here's the problem. Look at this, right? No volume on the follow through. That is not good. If these two were, again, the sizes were switched, I'd be totally happy to continue going or to continue holding long here. But when the red candle had a volume spike into the low, and then this one was weak volume, yet look at the range, right? It's an engulfing candle. It's engulfing the previous range completely. So this is like exactly what the bulls wanted, was a probe above and even another test below that rejected. Like everything about this candle is perfect, but they got no volume on it. So what's going to happen? Well, most likely what's going to happen is they're going to fail here. And when they fail, it does not mean that we're going back to the lows. Does it sometimes go back there? Yeah. But you know what usually happens? Spike, pullback, lower high, and then we go, right? But look, this just a couple, when we were here, oops, I keep doing that. When we were here, I'd say anybody who was used to trading in 2020 would be like, buy that dip all day long. Whereas if anybody has been used to trading the last week or two, they're thinking short that puppy, we're going to the lows, right? And it all has to do with whether or not you're used to trading in trends or you're used to trading in negotiation. And lately we've been doing a lot of expanding negotiation. So that's why this just when you're just looking at the candle, it looks like it's going to fail, quote unquote, all the way down. But this is not failure. Right? That is not, I know it's big volume. And so people are thinking, oh, big sellers, but not after this, not after this. If this candle was down here, yes, short it, which is weird, right? Because you're lower. But that would make more sense if you got this exact candle after like here and then that candle down there with this volume, it's a short. But when we have momentum that's high and you've spiked and made a new high, like it's the only way you can short this is if you're targeting here. That's the only way. And even that doesn't work, right? So what I was saying is that at that point, it probably looked to some people like it was clearly going higher because you're in a trend and trends usually pull back and go higher. And then it technically does go higher, but it just doesn't go anywhere. There's no follow through and there's no volume. So volume and range analysis tells us that we at least need some kind of pullback. And it further confirms that we're likely in some sort of a negotiation range. Okay, so here's that big seller candle that everyone who was shorting up here was waiting for, and it's got like measly volume. Well, we are kind of making a bit of a megaphone here, so maybe a big volume candle comes in, but at this point, I'm not excited to short either, because there's just no confidence on either side. Oops. Okay, so they do increase volume a little bit. Still nothing crazy compared to this one, which was at the highs. So I'm not expecting this to go much lower. I don't have a buy signal, but I don't see any reason to aggressively short it. This is kind of cool. They put in a tight range, so now you technically could put your if you really had an interest in trading this, you could technically trade if it okay. So if it trades higher than this and closes higher than this, especially if the range filter switches to green, it makes sense to buy there. If it trades under this and closes lower than that and volume increases, it makes sense to sell there, right? But in any other condition, this is basically just the very middle of the chop that we should all be avoiding trading. So, all right, so they do break lower than the low and close below it on like dull volume. So I'm waiting. I'm not selling that. This just looks like chop to me. I have no interest whatsoever in this. You can start to see that the range is contracting too. See how back here, let me just get rid of these because there's too many lines. See how back when we were still trending, like the green candles generally had pretty good range. Even the ones with wicks were like pretty decent range, right? Like these, the hammers were big. Like these candles are big. Even the red candles are kind of big. Well, look at the candles now. We've gotten much, much tighter, right? And what that tells us basically, just like it did here, is this tightening range is building energy, and that energy will be released into a impulse move. But it means we should wait. From a trader's point of view, when we see this, it's identifying where the decision is, but it tells us to wait. An obvious decision point, just like visual support resistance, would be there. And that's probably where the bears are gunning for. The thing is if they hit this, they're going to run into this structure that we drew before. So it's probably not going to do much unless they get a lot of volume. And then we've got this midpoint here, the midpoint between the voodoo range, and that got tested from below and has not yet gotten tested from above. Makes a ton of sense for that to stop to get tested. And then here we like have these little single prints here that might get right. There's all sorts of spots where it can bounce. That's all I'm saying. It doesn't mean we should be buying in all those spots, but it means before you get ultra bearish, realize that it might have to bounce at every single one of those spots before it trades through here, just because of this move, right? So if you learn nothing else from this presentation, what I want you to take away from this is that when you see this breakout, consolidation, continuation, retest, breakout, consolidation, continuation, right? Like that kind of structure takes a lot of energy to get through, and that energy can be through time or through volume, but you need one or the other. And so if you're going to try to break that, you better have a huge volume. Look, this wasn't even enough volume, right? These guys still had it made. They were comfortable when these guys sold. They had no risk whatsoever to losing their position, to going red, I should say, on their position. Like none of these guys even got touched, and that's where all the volume was, right? Like here, let's say you were the guy that bought right here at the very top of this candle with a market order, right? Because you're like, big volume, big breakout, buy. You're not even nervous here, right? You're like, oh man, I came back to break even. You're down barely any, right? Whereas like if you got in where you should have gotten in back here, or I should have gotten in, you're like not even sweating at all, right? Because you're still in profit, well in profit. So whereas if you're short, let's say you shorted this breakdown right here, right? You're like, I'm not going to short this one, but if we spike and break down, I'm going to short it. And here's a lot of volume, so I short this. You're uncomfortable here and just praying that you get out of this trade, right? So why do we short this? Why short this if everybody else who's short was like just in serious pain and just looking to get out of that pain moments ago, right? Like I said, it doesn't tell us what's going to happen, but if we can think about what the participants are experiencing, it's going to help us predict their behavior. So continuing consolidation with low volume, it's totally useless. There's no difference to me between any of these prices now. Inside of here, I have no care in the world whether or not we're trading at the top of this or the bottom of this. This is just some like micro fractal expanding negotiation that will eventually resolve. So I will just wait for the resolution because I don't have risk reward to trade that kind of chop. So we do get a breakout. So let me just show you. Here was the range of the chop. We broke out on extremely low volume after this interesting little gap here, right? So what's probably going to happen? We're probably going to pull back. Oops, if I had to guess. Maybe not right away, but pretty soon. Oops, I don't remember what I was pointing to here, but I'm going to get rid of that. So we do pull back a little bit, but we close above the consolidation range. I guess technically it started here. Close above the consolidation range. Volume is still very low, but that kind of makes sense because this whole area is negotiation, right? We're not breaking into anything new. This has been previously negotiated. And so really what this is telling me when we break over what looked like structure and we get no volume, really, it tells me that this is balance. So what do we do in balance? We stay away from entering in the middle, which is where we are now. And we try to long the bottom and short the top, right? Sell low highs, buy low, sell high. I don't want to be the first one to sell it. I want to be the second mouse to sell it, right? So if I'm going to sell it, it needs to basically break this and then fail. That's all I'm saying. Other than that, I could try to buy a dip or a breakout if there's high volume. But right here, this is not looking very much momentum, right? I think everyone would agree that even though it broke through the structure, there's not really any sign of momentum here. So we're probably just going to chop around and do nothing. So let's see. Yep, pullback makes perfect sense, right? They tried to break out. We got some information with the volume. They spiked a little bit and then pulled back. I'm probably not trading that, but see how this went red to green, right? And that's why the arrow was there. I had said that by the time you guys were finished with this, you would know why this entry would not be a good entry. And the reason in this case is volume. You had the range increasing, but we have decreasing volume. Makes no sense if this is a breakout. So even though it went red to green, we're not buying that. I'm not buying it, I should say. You can do whatever you want. When it spikes up into this structure up here and rejects, it does look bearish. I would definitely say that. The problem is that you just had this big impulse move. And just like I explained before, there's all these buyers waiting in there. Some of them are people who sold it earlier, right? And there's also just not a lot of follow through on the volume. So I'm just thinking there's no reason to get involved at all in the middle here, especially see this red line here. So it's telling me we're at basically the volume point of control in this viewable range. And while that's not a session, it basically tells me this is a high volume node on this time frame. And what should we do in high volume nodes? We should target them, not trade from them. So I'm not getting involved here. And I'm not saying it's not going to go anywhere, but I would not have any reason to get involved. Okay, so there's a cool little buy, right? Like you get a little volume spike to the bottom and it closes higher than the previous low. I don't mind buying this as long as you're only targeting a scalp, because sometimes it'll go to the highs, but a lot of times since you took out the low and you came back in, you're going to get a little spike here. And it might, if you have the risk reward, I don't hate it. Because the volume is nice and strong. If you immediately reverse, you can actually short it. But that's a really advanced move, and I hopefully don't have to explain that. I'm hoping that doesn't happen. I honestly don't know what happens, so we're gonna see. But my guess is it goes slightly higher, if not much higher. So we get basically no follow through and more consolidation. Not what we want to see if we longed. Just not enough. And I'm not stopped out yet. It's just hanging out, right? Like this is the problem with trading at midnight. Like it just sits around and takes forever to do anything, but eventually it does hit target, I assume. I'd love to hit here, but that's a little bit of a stretch. Yep, POC, you got it. POC is the target on the long scalp. Exactly. You want to hit that high volume node to get most of your risk off. It doesn't mean you should be out of the trade at that point. especially because the previous impulse move was to the same direction, and trends tend to continue after pullbacks. So once I get this flip, red to green, it's confirming that I should not be short, first of all. And then if I see that I had an impulse move here and I think that we have not yet taken out the mid of the day, maybe we're holding VWAP, right? Like if I've got other evidence that this could actually be a trend day, especially considering this is a 3 minute, right? I could get long here and hold a little bit more. But the point of it is that if you start developing any time or volume underneath this, you have to assume that at best we're in balance. So what's in my opinion optimal is getting in here, or I guess you could get in here, but really the trigger is this one, or the retest. So getting in here and then actually getting most of your risk off right there, but you were risking off of your stop goes under here. I say your, but I mean mine. One's stop would be here, and your target's here. So anywhere where you could get like 1-to-1 risk reward, it's a pretty good scalp. And then the great thing is, if it continues, you've got a runner, and it's free, more or less. You've already paid for the risk, in other words. Like if I took 6 contracts and I took 3 off here, I've got 3 runners running for free. Because worst case scenario, I come back and I break even. Because I've already gotten out of 3 of the contracts, right? So that's how I would think about this: is assume you're trading mean reversion because it's balance. But if it happens to be a continuation of a trend, brilliant. Hopefully that makes sense. I'm just going to keep moving here. But feel free to ask a follow-up if you want. So we'd already gotten risk off there, and I'd be in runners. And like I said, I have no idea what's going to happen here, so I'm just kind of taking it one bar at a time. So you can see we got a big doji candle with lots of volume. High range, high volume. What does that mean? It means there's a decision being made, right? We don't have a voodoo range level. We are in a RV pivot, which is interesting, reducing volume and price pivot. But that doesn't really come into play until later when we return to the area. So for now, it just basically means consolidation with low volume, decreasing volume. So once we put this in, that is telling me that this point and one of these points is a decision point. If you just look at this, it should be pretty clear that the higher one is a decision point because it's a previous resistance, right? That's pretty obvious. So then we look and say, well, why did they stop here? Why did the shorts, why did the people selling get stuck here? And we look back and it's like, oh, I see. It was previous resistance and previous support, right? They're testing the same area from above again. So if they lose this, guess what? This is gone. And I like a lot. Now it doesn't mean we're going to go to 0, right? It's just it's in balance, it's negotiating, so it's going to make a lower low and then it's going to bounce a lot as well. Sometimes it's just going to fall, but the problem is that there's now no reason to have our stop here. It needs to be up here now. And what I hate is that it's right in the middle of the range, right? So then you have to ask yourself, okay, is it still worth it to even hold it, knowing that this price and this price are now practically the same from the market's perspective? Because if it gets through this, it's going to target their liquidity down here, almost for sure, especially down here, right? So the next bounce is probably going to be here at the next level, in this little single parens, or else down here. So it's like, why give away all of this? But then you have to ask yourself, okay, if it doesn't immediately bounce and I see it even slightly pull back, should I just exit the trade? This is one of those spots where you probably could. It's so choppy that it's like, okay, if this is not going to take off, especially with this volume, if this very next candle doesn't take off, you probably just exit. Unless it's like a consolidation candle and then you think the next one good, but let's see. If it's like a doji again, like then you wait. But, yeah, okay. So this is what I was hoping would happen, honestly. When this gets taken out, there's no reason to hold long here. Unless you planned on holding beyond this. If you were just scalping, hoping for a continuation, which is how I would have traded it, I'm out of the long with my runners here. I don't want anything to do with it anymore because I've confirmed that at best this is negotiation. There is low volume on this candle, but it hasn't broken a swing, right? So I wouldn't expect any volume here. And look at the range. It moved through that whole range on like 0, like less volume than the previous one. That's concerning. It looks to me like this trend is ending, and we will be retracing probably 50% of it at least. Okay, there it is, right to the midpoint, right? Now, do we buy here? No, absolutely not. I don't care if this is the like the number on your like fortune cookie. Like, don't blindly buy levels, anybody's levels, mine or anybody. Even though you see them work, quote unquote work all the time as a bounce, don't blindly buy them, right? Do some analysis. See that like everybody was long here, it balanced, and now we're coming back and we're testing into it. Could it bounce? Yeah, but look at the volume, right? Like it's confirming this move. It started out with this big range on low volume and it increased as it broke the swing. Why? Because everybody was long. I just explained to you why, right? Like everyone was hoping that this would just continue on, and they're just getting all their runners destroyed. And then anybody who didn't take any profits getting nervous for the first time, right? They didn't care about this. This is a bigger deal. So if this, because one thing you could right away say is like, well, hold on. I thought you said earlier that we should be expecting a pullback to here and then a bounce. Yes, if it's the first one, right? Extremely important. The liquidity is here at this point, and everybody's interested, right? You can see the building volume. Everybody's interested in being a buyer. So if they pull back to here right away, it's probably going to bounce. It might not continue higher, but you're going to get one of those immediate retracements because of this momentum. And that's the important thing to understand. It's not random. It's because you had all of these trapped shorts down here. Once they got an opportunity to get out, they did, and it ends up being a big rip back up. And now that's happening constantly, right? We don't think about it, but that's all this is, right? All this chop is just repositioning. It's just a lot more obvious to us when the ranges expand like this. Let's see. After the 574 retest, got a question in the Discord. Is this a short? Okay. Good question. I actually do like it as a short. I do. I would take the breakdown. Here I don't. Oh, you're talking this. So if you saw this as balance, it's fine. The second one, okay. This one I like, but I would have to wait until this broke down to be sure. I probably wouldn't take it on this indecision candle because of all this momentum going higher. But once I see that they rip through it, and like I said, I know I can get out of longs, that's actually a pretty clever place to get short. I like it. And you can take some profit in this liquidity here. Like I'd be out of half my position already. For the same exact idea as here, only in reverse. I do think that works. Just because of the shift in momentum that these two candles present, especially this break here. And like I said, sometimes people, you might think low volume, don't trust it. I wouldn't expect any volume here because you're not breaking anything. But we knew to watch this level. And so it becomes an edge to get in here short because it was such a good spot to exit the long. But what was I going to say about over here? That's okay. It'll come back to me. Oh, I know what it was. I was mentioning that if it pulls back that very first time, it's likely to bounce. It just might not continue the trend, but that once you have evidence that you might be going sideways, which happens here, this first probe, it does not mean that you're not going to put in a higher high, right? So don't just short, but it also does not mean that the trend is just automatically going to continue. It can, it usually does continue eventually, but it often continues after some sideways action. So don't be anxious to trade that first pullback unless you are buying the dip after a really, really strong move like this. If you want to buy this, I don't hate that. It's just that it doesn't work very often these days. But that worked every day for like 4 years. So yeah, at least it felt like 4 years. I guess it was mostly not 2020 at the end of 2020. It was working constantly. Just buy the first consolidation and take profits at the next highest high, right? Like that trade doesn't work very often anymore, but it's technically valid. But the important thing is to see once you have evidence that you might be going sideways, don't assume that the trend's going to reverse all the way to the bottom, because unless this entire range is negotiation like we had today on Wednesday. So We said this is a good sell or a good short. I like it for a short. I hadn't thought of that initially, and I'd already have most of my risk off, right? I'm still assuming we're in balance here. There's no reason to think that this lower structure will get traded through easily. So the first test into it will probably be bought. It doesn't mean it doesn't then roll over. But why, if you're getting short here, expecting this entire thing to fall, like you're missing the boat. That's an important concept to see too. You don't want to be shorting in the hole down here. Now, can you short here on a retrace? I wouldn't, because this momentum looked like a part of a negotiation, like a balance period. I do not see this as some new impulse move yet. So this is the 5-minute chart. I've switched over to ES, not on purpose, but just because that's where we're at. And let's take a look at these two. So I want to find some structure inside structure is what I'm looking for. Okay, here we go. Here we go. All right, so let's look at two more examples, right? So let's say you're trading this morning. Let's just go to the morning, right? So you get, this is the 5-minute chart in ES. Okay, opens here, right? Oh, first of all, let's think about structure, right? This is the most important thing most people forget about. You have to think about where you are on the chart. That's going to tell you whether or not you have an opportunity or not, and which strategies to use. So let's take a look. What before the open, right, at 9 o'clock, the first thing I noticed right away is that we are opening within, this is what I was trying to draw, we're opening within this large range, right? It's obviously pretty wide, but at this, whatever day this was, the 14th, which I don't remember at all, at 9 o'clock, whoops, we are opening right in the middle of that range, right? And you can see that there were already these big retracements. So like, this is another little hint. Make sure I do this right. Use the mouse wheel and not the up arrow. All right, so if you take a fib tool and measure a retracement like this, oops, I gotta switch this to like this. Okay, and you get beyond a 62 retrace. So see how this is like an 80 retrace, right? It's like a lot deeper than 50 or 62 or 61.8. Like that kind of a pullback is generally seen during negotiation periods. So you should not expect this very next move to break the high. I hope that makes sense. What you usually see here is this. Like a, oh my God, wow. It's like a triangle. It is late. I guess I might be tired. You get like some kind of a consolidation like that after this big pullback. Right? Let me find one that's not that big. Like a real trend. Okay. Here. So this one started here, right? That one wasn't even close to 50. And when we go to this one's 62, right? This can just continue higher. This is where the V bottoms come from. These moves, the V bottoms that just come right back up and break, is when you get this 50-60 back, 50-61.8, and then an immediate bounce with high volume compared to the previous of the same color, right? This pullback was light volume, which is good. That's what you want to see. And then they came in heavy with the shorts, sold it hard underneath the 62, and they bounced back on high volume and just ripped it up. You can see I get a entry here, here, right? The pink is like a crude entry. Like I said, it's not what I'm actually using to get in, but I don't want to be fighting that. If I see that happen, I do not want to be shorting this candle. And then if I can get a setup on the algo, I'll take it. Like it's the first thing I have to see to know that we're not just like coming all the way down. If I wasn't sure, that's what I'm looking for. But this level here becomes important, right? I know I'm on a different day than I planned on, but it doesn't matter. This should work pretty much anywhere. So if I take this, right, after the 50-60 pullback, it's technically this. Somewhere in here, wherever the volume is, this one. So it's here. Why is my magnet not on? It is. That's what matters. So we need to close on this time frame below this line. And that happens here. And that should happen on higher volume, which it does, confirming it, right? So if you see that if you think about this way, that pullback here from here is significantly more than 62%, right? So all of a sudden, if you're a buyer down here, you should be expecting your entry to get tested. It may not stop you out, right? It might hold. I'm not saying it's not going to work. I'm just saying that like this part of the bull move is done. There's no question at this point that it's not going to just do this. If it does come back up, it's a short if you can get it in this structure. Because what happens is this becomes resistance. So let's see what happens here. I don't even know. Probably just let's go now. So yeah, it comes back up, it tests the structure, right? It actually tests the line, like almost perfectly. It tests this high volume test. So it came down, they like probed through the 61.8, bounced, came back, held it, absorbed those sellers, tried to bounce, lower high. This is your first short, my first short. Technically, I'd probably wait for it to get under the voodoo range level and take it here, to be completely honest, just to be sure that I'm not just like selling the middle of balance. But then once it comes down here, and then comes up and then it turns pink again, I can start looking for shorts again, but it's aggressive, right? Because you could get stuck right here. You are shorting in the hole. And if you see any sign that momentum's slowing, you have to back off. Like, even that is not good. That's not what we want. We want this to be like immediate, like boom. So like right there, it's like, I'm probably taking like half my size off. Like, I don't like that one bit. Yeah, and there I'm just stopped. Like, nope, don't want anything to do with it. I don't want to be short anymore because they tested underneath it. I'll wait for the next one, right? And the reason isn't because I think it's going to the high. It might, but the reason is that the momentum has decreased. And look at the volume, right? Bullish volume coming back into this test tells me they're not going to give up easily. And so I might as well wait for the range filter to flip again, and I can try again, and I might get it up here, right? They may be absorbing this old resistance, turn support, and they're going to bounce and then rip it down. So I don't mind taking this short, and you get a small stop, or maybe you get your risk off because you got underneath this low. That's honestly, you know what? Now that I look at this, you guys, one reason I don't like this is it broke down underneath a low previously for the day, but that low is above the open. So it's like, it's kind of deceitful, right? It looks like it's a breakdown, but it's right into support. So maybe I don't actually like it all that much, but what I was initially thinking is off the bounce, right? If you're getting short up here and like targeting low of day, I don't hate it. But it's probably not going to work, and then it stops. So now the question is this a long? And usually I would say no. But there would be reasons to get long if on the higher time frame you were like one time framing up and you got this kind of pullback, then this opportunity is great. But if you zoom out and you see that we've traded within this range previously, and especially if we've traded below it, chances are we're coming back to like confirm this, and the highest we're going to go is back up here. So it's just a small window of opportunity, and you'd have to have like precise location. So I don't mind it, like if it's low, but then you'd be targeting like here. You know, it's a small scalp. It's not a huge opportunity. Okay, they probe up that, like that looks pretty bearish, right? Will current VRs work with backtesting? Yes, yes, but not as well. Not good question. Yeah, if you go too far back using the VR levels and the pivots and stuff, it's not going to be as precise, certainly, as it would have been if you used those levels. But keep in mind, though, they're still available on Twitter. So if you know the week, you can actually just look it up and then like open up my tweet from the Saturday prior to that date, and it's still there. So all you need, you don't even have to put them all on your right. With this, all you would need is the range and one of the levels to put in. Yeah, and like that's provided for a very low cost of free. So, yeah, the one reason I do like this as a long is because it bounced underneath and closed above this previous low, and we're close to here. But I don't like it because I just don't like the expectancy with all of this. This is just so much resistance now that they gave this up. Once they give this up, it's just like solid resistance. So like I said, I just would not be doing much here. But I'm guessing it's negotiating. It's just going to go back and forth. And I'd have to, like, you could technically sell this probe and buy this like that. I mean, it's a different strategy. It's very advanced, but I don't mind that as long as you have a reason to do it. Okay, so they break through on higher volume. Did they break the low? Barely, right? They tested to the low. Like, I honestly don't really trust that. Just doesn't look all that strong. I'm not sure what happens, but look at how the range is contracting here. Like the candles are getting smaller. Like I don't think it's going to go any farther than this. That's for sure. Could be wrong. There's some volume. Interesting. Okay. So it did take out this. So I was looking at this volume on this probe and seeing that the following volume on these decreasing range candles were lower. But to be fair, it is higher than this one. And we are into this new structure. I don't see a reason to buy it yet, but I also don't love shorting into low a day. I'm just not very good at it. I'll be completely honest. I'm not comfortable most days just shorting into low a day after an open drive higher. It's really hard, right? To have confidence that you're going to go far enough to not get completely killed too often. So anyway, it comes back with a nice bounce with some high volume. Like this, I'm not buying it yet, but like I don't mind a long here. I'd be targeting the VR 4418. Doesn't look like it's gonna work. Look at that volume, right? See this? Like no follow through on the bounce. So if you saw this and you're like watching the footprint of the algo and you see that there's just no volume up there, like it tests there and just nothing and it comes right back, like get out, break even. And honestly, that's probably a great short. When this flips, this is the first short that I'm comfortable with because it looked like a long that got wrecked, right? And now we're under all of this structure. So this one feels really risky to me. Shorting low a day here does not seem that bad. Now it looks like I've got all you trapped and you're going to be in pain, right? You couldn't even get back to the voodoo range level. You couldn't even do a half VR retest. Like, what's that say, right? I know this is a previous week, I think, but it is. But let's imagine that it was that range. Like that would be, yeah, this would be a sign of weakness here. But that's true. That's not actually where the VR level was that week. So we do go lower. Look at that volume. That's really nice. Okay. Okay, now it's starting to slow down, right? We got a smaller range. The range filter's not falling straight. It's like starting to flatten out a little bit. Okay. Yeah, losing volume, right? Good time to take some profits. Yeah. Look at that, right into the current VR. Weird. We get a hammer candle on high volume, lots of profit taking, right? It's not a reversal. This was a pretty heavy move with a retracement, right? But the same reason you didn't buy that first pullback is the same reason that you don't, let's see, you wouldn't buy this. No, I'm sorry, you would not short this. Is the same reason you don't buy up here, right? When you first break down underneath this little like retracement here, don't short that first pullback. Definitely don't short this. But I wouldn't short this either. If you short up here, great, but if you're aggressive, you can do it. But don't short down here on this little first breakdown. Same thing here. Don't buy this little probe above like a level. Even if you have like a pivot there or a level, like don't just buy thinking like we're above it. Like no, like we're not. we're just it's just profit taking that's reaching into the zone, and it's probably gonna get rejected, especially if there's no volume. But now look how we're flattening out, right? Flattening out, flattening out. Okay. So this is the sideways I'm talking about. Notice we don't get a huge V here, at least not yet. Usually you don't. Usually you get some sideways. So I'm not buying this, even though it's switching. Not when this is like falling so hard. I'm just not fighting that momentum. Like I'm not gonna just like nail that even if I have a VR on it. I'll observe this and then watch for a setup, but I'm not just buying it blindly. Because that happens a lot. Okay, this one's just fine to short, right? You got a retracement, couldn't close higher than the previous high volume candle. See how I'm looking at the green, the two green candles. This one here's, whoops, is the primary one. There's no close above it. It's the highest green volume candle with big volume. This one has more volume, but it was profit taking, right? That volume is down here. And if you're not sure, you guys, keep in mind, you can do this. Fixed range, right? And just like grab this. And just move it. You can see where it was. Oh, okay. Volume was up here. Interesting. So even if you wanted to do something like this, like let's say this whole consolidation range, right? Like here. Okay, let's say you're in this and you're wondering if this is a long. What I'd want to see is breaking above this point of control of this structure, breaking above it, closing above it on high volume, which we did here, right? And then I want the retest to hold. So we retest. So the next bounce I can buy, like a breakout here, or even probably a breakout here, but definitely here. I could buy it because it's confirmed that VPOC. But when they immediately just give it up, like don't just buy it blindly down here, right? Like this becomes a short once this gets lost. Once that VPOC gets lost, it becomes a short. And it switches right there. The VR, I mean the what's it called? The range filter switches colors right at the right spot. So that's all. This is still momentum, right? Look at how fast that's falling. And there's no volume down here. Like they're not even trying compared to the last try. Like look at this. See this? This was like a solid try, right? These guys like they made a pretty good try to bounce this off the voodoo range level. These guys barely tried at all. This is just profit taking. Like really low volume compared to just the previous candles. Just barely tried. Didn't even get it above this candle, right? No reason to buy this at all. I don't care that it's in the pivot, and I don't even care if it's the bottom. I don't have any reason at this point to buy it. That's all I'm saying. Could it pivot here? Yeah, I've got a purple pivot here, probably. It could. But those pivots get traded right through and then backside tested and continuation lower, right? That makes this a good short. It does not make this a good long. For the same reason, this is not automatically a long. I have to see evidence that the longs are, that the bulls are in control. So here's another test. Building volume. This looks better, right? This looks better. I can't buy it at this very moment here. Even though it goes red to green, momentum is not bullish. So I'm just not short now, is what that's telling me. Don't fight the color here. I'm not going to short it unless it turns red, is what I'm thinking. And I'm wondering if this might be the bottom because this went sideways, range contracted, and volume's now increasing. So this one looks pretty strong, right? Now you can probably say, okay, we pivoted at the purple pivot, we pulled back into it and bounced. We broke a level that clearly seemed significant before and closed above it. I'm no longer interested in shorting here. Yes, it could turn around here, and I don't really want to buy it, and I might miss it, right? It could just go, and that's fine. But if it pulls back here, I'm probably looking to be a buyer. I mean, that's a very light pullback. It probably worked on a lower time frame. Okay. Yeah, like that's your pullback. It didn't flip the range filter on the 5 minute, but that was your pullback. Pretty sure. If I had to guess, it probably goes higher now. Sideways. Oh, wow, that's the close. Oh, that sucks. That's the close of the day. Okay. It might not work. There are stops on every system, right? Just floats around and does get to this old level. Like with no volume, I have no idea what it's going to do here, right? Like this is the problem with early Asia. Like it can just, it's so illiquid, it can just move anywhere. But the momentum did look bullish at the end, so I think it goes higher until a seller comes in and gets involved. So this seller is getting involved at the purple pivot, and that purple pivot worked last time, right? So I'm not loving that. It also switched green to red, and volume's increasing. It's just so low, but I'd probably be taking my long here. Or my profit from my long. If I longed this pullback, I'm taking profits here for sure because that's a sign of aggression and it's just a change in character. It might not be the top, right? But it's a good time to like at least get paid on that trade in case it does just fall. Because this is not really an impulse move, right? So there's a good chance that this whole thing does actually get retraced because it's not an impulse move this time like it was in the beginning of the presentation. So I don't know what's going to happen here. There's no volume. And it just floats higher. Okay, that happens. Broke right through the pivot, pulled back into it, turns pink. Okay, so this green is like a sketchy spot. I mean, it's early Asia. Like, who knows what's going to happen? But that's technically a spot where you could try to catch the trend. Oh, and then it rolls. So back into the pivot. Okay, so this is midnight. And do they bounce it? Normally it bounce. Yep, cool. So it works. So like I said, what I saw here, drifting, right? Drifting. We go through the pivot. I'd prefer it to be a VR, but with it, I mean, like if there was a voodoo range level in here, it'd be easier to figure out where to make the decision. But here they broke right through the pivot, which is a sign of aggression, and then they retested it and bounced, right? It took 2 tries, but the concept worked, right? It's the same thing as, this. It broke through it, came back, and tested it and bounced. Broke through it, came back. Might have tested it earlier, but it didn't quite get there. It tried here and then dropped. So let me see. I'm losing my voice. I should probably quit, but let's just see what happens here. Do we get a full retrace? Because it's looks like balance to me. So it's just none of this looks. What I'm saying is that like even this move, it's like it's a big push, right? This one candle had volume, but look at how like it doesn't do anything, right? This like the range like does not expand. You don't get this, right? Where it's like big candle, little red candle, big candle, big candle. Like, no, it's just, where was that? Here? No. Oh, shoot. I think it was here. So, like, yeah, you've got one big candle and then just a doji right away. And that doji has high volume. So once they break above that doji, they're like committing, like, we want this higher. So when that doesn't happen, that's probably a short. If you're paying attention to market phase and you know that this is probably not an impulse move and all of a sudden there's volume at the very top. Think about this. All the volume is here. So probably the best move would be to short a retest after they break down back into this purple pivot, but I don't mind an aggressive break sell here at the range filter switch. I don't mind that at all. It might not work, right? You could get another probe, but it looks bearish. You never know what the next move's going to be. Oh, look, are they going to do it? Yeah, I was going to say maybe they'll come up and take out the high. That would not be unusual because it's not trending. It's going sideways. So it's going to take out highs and lows. So if you got short here, you'd have to take some profits at the purple pivot when it retests, when it gets out of it and retests it and stuff. You have to take some off here because there's a good chance that it goes here and then rolls over. So if you see something bullish, don't stay short. You can always get short again, right? Especially with futures, like get in, get out, whatever. But yeah, like this looks like for the same exact reason as this, I like a short here too. Right? So if you were being cautious, you thought that looked bullish, even if you bought this, which isn't horrible at all, actually, for the same exact reason. Switching green to pink, or switching pink to green, bouncing off the pivot, and try to get like back into this volume range. Look, like I bet this volume is right on that line. Watch this. Oh, it's low. Interesting. Okay. Not what I expected. So you have to actually beat this. This is the level you need to beat. To be confident, you have to get under that. So this, or this, or this. And I'm just drawing the volume profile for that tiny little area. Figure out where all the big decisions are made. Here's a big, right? This is the first sign of a trend, right? Oh, but this is not building though. It went further, so no. We'd have to get bigger as we go. Let's get in there. Like this one the volume looks really strong, but it didn't really go anywhere, right? That's why you get that bounce and just the location. And then here, like it tries, but it's weak. It's not really a trend. It's just a move inside of a bigger range. It's just all of this getting worked out. And there's all these little supports and resistances inside there. Okay, so we get into the purple pivot, break out of it. Like I'm done with my short here. I don't want anything to do with it anymore. Like I liked it here and here and here. But once we get into this and we can't break further down under this, like I don't want to be short. Even if it rolls, like I'm not excited about it. There's no more volume, right? Like this it's dying off. It may go, but I don't. Yeah, this is long, right? Pink to green, bounce off the purple pivot with a high volume candle. As soon as you take this out, I can long it right there. Or even better, this pullback right there. Perfect. If you don't want to be aggressive and just buy the first pullback, right? Because this can happen. You buy the first pullback, you can't put your stop real close. If you buy this pullback, like that should be pretty safe. Yeah. So, oh, look at that. So it just rolled. It ran into this same exact spot and just failed. So you'd have to have this line. You'd have to know that that's where the volume was. And when it can't do it, now to be fair, look, the volume here was poor. So if you were paying a lot of attention, it looked like a hammer candle, and I didn't actually shift my gaze to the volume. But it's not breaking out of anything, right? We need a breakout here. It needs to break through all this resistance. So like this is an okay place to long, but when it doesn't break the resistance, it's not gonna do much more. Like yeah, that's not what you want to see at all. Like I'd probably just take it there. It's so frustrating because they always do this, right? It looks like it's over. Like you think, oh, my trade's not working, and then they put in like what looks like this like sweet hammer right on the same spot. They give it a bunch of volume, right? It looks so hopeful that you're like, okay, I'll leave it. Let's see if it works. Like I swear, like every time that happens, once that gets taken out, it's probably a short. Yeah, because everybody had their hopes on this candle, right? Once that's gone, boom, it's done. This low, none of these were really that meaningful, right? It was just they were just absorbing it at the same exact like location, this purple pivot the whole time. So all of this whole move was just on low liquidity and low volume, and so it can get retraced very easily. Right? They tried once, bounced again, tricked me, right? Like I'm thinking, okay, it's long now, finally. Nope. It's pre-market and we die. Why? Because I mean, that's just it's not the kind of market that we've been trading for years. Now the funny thing is once they get it all the way down here and make everyone assume that it's bearish, what do they do when the actual New York opens? Open drive higher, right? So that's hard. Like that's tough stuff. It's really tough. But look, if you're not sure, whoops, if you're not sure, we talked about the pullbacks, right? So you can also do this the other way. So let's say this is where you're thinking it's bearish, right? So exactly the opposite of what we did before. We're going to pull that back and we're going to say, okay, if it's bearish, what should happen is it should come back up here and it should reject around the 61.8. And that's the only way we're ever going to get the lows taken out. That does not happen, right? That does not happen. Well, it's actually kind of happened. It kind of happened, actually. Okay, it did happen. It's maybe 70%, but still, that's a reasonable retracement to think that this might be going lower. Volume's decreasing. That's not great, right? And you've got a pretty big retrace here too. So this just looks like consolidation to me. It's getting tighter and tighter and tighter. And I think we talked about this before. Yeah, we already drew lines here, so I've already been here. Oh, and then it does break out. And let me guess, it fails. No. Does it fail? No, it broke out, right? Over that, retested it, went higher. That would be normal here, is to get over this big volume area, this structure here, get beyond it, retest it, and then go higher would be normal. But this was consolidation. And that's the important thing to see, is that even though this looks like open drive higher here, volume is decreasing, right? And we're running into resistance. We're not out in the middle of nowhere. We're running right into overnight resistance where all the volume traded the previous night. You're not going to just rip through that on decreasing volume. If this was reversed and you had increasing volume, maybe you would. But with decreasing volume, you're not just going to rip through all this in the first try. It's just not going to happen. What are you going to do instead? You're going to flush or just like shake and bake, right? Makes sense. Hopefully that makes sense. Okay.